All right, you're welcome to the very last day of the first part of our back to school SimplyPips. Today we'll be discussing what we call BTB, right? BTB is actually an acronym for break the bank. Break the bank. For those of you who've been trading order blocks or with us before, you would have been familiar with the term LSB. BTB is our own LSB. So we'll stop using the term LSB, we'll use BTB, so it could be in tandem with the way we talk, right? So let's give a history or the anatomy of BTB. All right, so price we know with either trend or range. Price we know with trend. Where are you now? Uh-oh. Okay, should be here. So price we know with either trend or range. When price is trending, let's take an uptrend for instance. It will go one, come back. That's the lower high, higher high, lower high, and eventually higher high. Let's, for the sake of this webinar, assume that this is a H4 price action. Right? This is a H4 price action. And if you've been following us, we would have AQZ qualifying candle here. We'll have an AQZ qualifying candle here. And price traded back into the AQZ qualifying candle and then rallied. We'll have an AQZ qualifying candle here. Price traded back into the AQZ qualifying candle and rallied. Right? Now, this is H4. We have an AQZ qualifying candle seated here. And we're anticipating a retest of the AQZ qualifying candle pattern for us to buy. We have two ways of taking our trades from here. The first one is to use the method of dollar cost averaging, where we draw our AQZ on that point, AQZ fib, in a bullish manner from down to the top. Then we have buy limits upon the tip of the AQZ block, the middle point of the AQZ block, and of course, the preferred entry. We would now be anticipating that as price returns back, it will pick our entry and then rally. We don't have to be there when price does this. We just place our limits and take a walk. So for those of you who were around early part of the year when I was narrowing down on daily OBs, exactly here, right? And we discussed dollar cost averaging. So in dollar cost averaging, we are saying that we don't have the expertise of knowing exactly where price will make a U-turn from. But we have a bias that price will make a U-turn from within this box. So let's say this box is divided into two, right? This is the bullish and that's the bearish, and this is the preferred entry somewhere in the middle. So we're saying we know we have a bias of bullishness, but we don't know where price is going to make this U-turn from. So what do? We have an entry here. We have an entry here. And then we have an entry here. If price comes and pick our entry one, fine and good. If it picks entry 1 and 2, fine and good. If it picks entry 1 and 2, 3, fine and good. If it picks them all and hit our stop loss, fine and good. Head or tail, we win at the end of the day, right? So the idea of dollar cost averaging makes a lot of sense when you want to remove the extra burden of predicting with precision what price will do. How will this help your trading? So let's take the scenario here, and we're going to repaint it in a bigger box so we all can have proper view, right? So let's say the range here is, just for the sake of calculation, 60 pips. You have an entry here at 0.0. You have an entry here at 0.30, and you have an entry here at 0.60. You've done your position sizing. Your stop loss is safely tucked away below the preferred entry or below the AQZ block, and you have your SL there, right? Now you've done your position sizing, and you decided to use not a variable position sizing. Yeah, let's not use variable. Let's use fixed position size for now, right? The correct thing is to use variable, but let's use fixed just to make this thing make sense. So you took one standard lot trade here, you took one standard lot trade here, and you took one standard lot trade. So if price pulls back and pick all of your trades, you'll be up, you would have had 3 trades running. Now watch this. By the time price is down here, your very first trade will be negative 60 pips. If it is a GU trade, an EU trade, 60 pips on a one standard lot will be equivalent to $600. So that will be $600 negative, right? This will be negative $300. And this, the last one, will just be flat. Let's say, just for the ease of calculation, that soon after price touched your third entry, it made a U-turn and started heading back upwards. By the time price arrives at this level, your last trade will be up $600. Your second trade will be up $300. And this will be flat. Now, at this level, you're already up $900. However, the traditional way most people will trade is that you pick one entry from here, and as it starts pulling back, you'll be melting in fear because what you have is a pullback. And as it comes back, you are getting happier, and by the time it gets here, you are now relieved because your balance is now flat. But look at the money you left on the table. Why doing that? If you had splitted your trades, if price pick the first one and move, fine, you make that small profit. If it picks the 2 and move, fine, you make that profit. If it picks the 3 and move, fine, you make, if you hit your stop loss, sorry for your loss. But if it goes in your direction, by the time you are back to your initial entry, you're already now $100 in profit. If it goes 1 pip above that, the last trade, the first trade, you'll also be in profit, and you are in profit and profit and more profit. That is the concept of dollar cost averaging, right? So that is one way you can take the trade. And this, remember, we say this black Elliott wave now is on 4 hours. So if you got your PC or your AQZ qualifying candle or your AQZ bias on the H4, you could dollar cost average on your AQZ block on the H4, and then just put your stop loss and take a walk. When price comes there, price will do what price will do. How many of you have found this out? It was a big revelation for me when I found it, a very big revelation. The revelation is this: when I enter a trade, even if I watch my phone non-stop without blinking until the battery dies, price will do what price will do. If it was going to hit my stop loss, my frequent glances at my phone is going to stop that from happening. So put your trade, take a walk, go do something more reasonable, right? Now, the second way we can take this trade is this. So on the H4, we had a push up from 0 to 1. Now, we need price to come back down on the H4. While price is coming back down on the H4, this is what it will be doing on a lower time frame. So on a lower time frame, price will be making lower low, lower high, lower low, lower high, until price gets here and make a lower low. Can you guys see that? So on the lower time frame, this brown, let's use something like purple. Needed to shout very well. Yeah, this pink line is actually 1 hour, 30 minutes, 50 minutes, 1 minute, 1 second, whatever it is, lower time frame. In the lower time frame, there's every likelihood, it doesn't happen like that all of the time, but there's every likelihood that when you go to the lower time frame, what you would see is a downtrend. Whereas on the H4, what you can see is an uptrend. But on the 15 minutes, what you will see is a downtrend. Right? So we want the downtrend to trade into the AQZ block. And then, rather than this downtrend to continue downwards, we will want it to come up and break the previous AQZ qualifying candle at point D. And at that point, we would expect it to pull back, retest that AQZ qualifying candle, and then we begin to make our move to point 3. Right? So for those of you who trade heads and shoulder, this is what you want to see. You want to see lower lows. Then you want to see price making a U-turn, going back upwards. Guys who trade head and shoulder, we call this an inverted head and shoulder pattern. Right? They'll call that an inverted head and shoulder pattern. Again, if you've been following SimplyPips for a while, I told you every strategy is a story. Just understand the storyline. Stop arguing with people whether your strategy is correct or not. The market doesn't care. Right? Understand the story and then act your part according to the plot. So on the 15 minutes, we expect a drop following the AQZ rules. When price comes into the preferred entry or into our AQZ block, we will now anticipate a break in market structure. And then we can now assume our buy position. What I just explained here now, we will put this in practice live, and we'll do that on what pair? Eurocard. Let's use Eurocard. All right. So let's go back to H4. Here we are on H4. And I'm going to use a sweet trade that happened on Friday, or rather this week. Very sweet trade this week. Let's start from the top so you guys can understand how we flow. What's happening. All right. So watch this. This was the, let's start from here. This was the bullish candle responsible for that high. Price came and broke it. See that? Price broke it. And once price broke that candle, we would have had a momentum shift, right? Let's call that up so you can remember. Boom, you have the shift here. Remember, the shift always appears at the next candle after the break in market structure, right? Fine. So you'd have had that break in market structure. When we have a shift, what do we say we do? We say we will fib this last bearish candle that caused the breaker, and we'll also fib the last bullish candle, right? We'll be anticipating sales from here or from here. That's what we explained yesterday, right? So notice price came back to that zone and dropped. Easy trade. Price came back to this zone again and dropped. Easy trade. Easy trade. Once this zone has been broken, we will now begin to look out for our momentum shift again, telling us what to fib, right? So here we have this shift on this candle, right? Then after then, we will be fibbing this candle here, the last bullish candle before the new drop, the last bullish candle before the new low. This bullish candle was responsible for this low. This bullish candle here was responsible for this low. So what do? We fib this to the downside, right? Now, usually, okay, let's just do this. Let's just do this. That's the last bullish candle responsible for the low. See how price broke it, then price pushed back up, right? Now, this is the last bullish candle again. If price had traded back up into this zone, we would have sold. Price never traded back up. Sorry, we missed that trade. No problem. We'll wait for the next one. This is the last bullish candle responsible for the new low, right? So notice how price traded to the downside, creating a new low. This low is lower than this. Now, this is where we're going to take our trade from, right? So let's call up our magnet to ensure that this is properly sniped on. So when this candle broke to the downside, those people who want to trade off the 4 hours, we simply would have had their sell limit at 1 here. Let me change this. It's looking, let's make it a different color so it's bold enough. Right, so have 1 there, they would have 1 more in the middle, and they would have had 1 at the PE. So essentially, the first and the second trade might have been triggered, or just the first, whichever, and then price dropped. No problem. But this is the way the guys on H4 are going to trade it. Those of us who love trading on the 15 minutes, we're going to trade this method. We're going to trade this price action using BTB. Now, so watch how we will do that. This is our sell zone. This box is our sell zone. Let me take out every other one so it doesn't confuse us when we go down to 15 minutes. Right? The lower part of this box is our sell zone. Now we will go down to 15 minutes and do this. Now, to help us spot this, we're going to drop a vertical line right here. Right? So this candle started at that time and pushed up. So we're going to use that and go down to 15 minutes. So 15 minutes now. All right. So see what happened. See that? So this was the drop. Can you see the uptrend now on 15 minutes? Look at the uptrend. I'll draw it for you so you can see. Right? Price pushed up, price came down, price pushed up, price came down, price pushed up. You see the uptrend, higher high, higher low. So what would we be waiting for? We will be waiting for a break in market structure. Rather than this thing to continue going up, it rather came down and broke this level. Once that level is broken, we are sellers, right? So the last, sorry, let me clean this up. The last bearish candle before the high that was broken becomes our break the bank candle. You see this last bearish candle? This is the last bearish candle response for that high. If you know LSB, you understand what I'm saying now. This is the last candle, bearish candle response to that high. We had a bearish, bullish candle up, bearish candle down, bullish up. It was moving up and down. Let's take this line out, right? So on the H4, this was the candle you saw, but it was moving. This is the last bearish candle response for that high. We're going to put a horizontal line on the wick, lower wick of that candle, right? Once price broke beneath it, boom, it tells us that we are no longer buying, now we want to sell. We are no longer buying, now we want to sell. This last bearish candle is our break the bank candle. From this zone, we are sellers. But how do we use our AQZ fib to still sell? We're going to draw our AQZ fib in a bearish mode now from the highest point to the tip of the AQZ, right? BTD candle. So this was a drop, this was a sell, this is a sell, this is a sell. See how price reacted off, straight off the preferred entry, and then did what? Dropped. One advantage of using the AQZ BTB method, again, if you've been following us for a while, is that it helps you reduce the number of pips you might need to take to hit your TP. So I'm going to put our roadmap now. So if you are taking this trade off here, you are good. If you are taking it from the preferred entry, you are good. Your stop loss right now will be at the top of this level, right? If you're trading off BTB, your stop loss is also going to be smaller because you're just going to place your stop loss above your price action. However, if you're trading off of the 4 hours, your stop loss will most likely be at the outside the AQZ block, right? Which will be somewhere around there. That'll be your stop loss on the H4. But on the M15, your stop loss will even be more tighter, right? So that was the last bearish candle. Let's magnify this a little. All right, that was the last bearish candle response to that high. Price broke it to the downside, pulled back to the tip, dropped, went back again to preferred entry, and then dropped. Now this gave us from the preferred entry, TP1, TP2, TP3, TP4, TP5, whoosh, keeps going. Let's see everything. Let's see everything. Let's not just stop. Let's see everything. So I'm going to draw another one, right? So TP1, 2, 3, 4, 5, 6, 7, 8, 9. All of those TPs. However, if you were to trade off of the 4 hours, let's see what will happen. Okay, let's leave that. Let's not make this too clumsy. So here we are. That is BTB. It is a break. BTB is simply momentum shift on 15 minutes. That's all. BTB is simply momentum shift on 15 minutes. I'm going to take some things out here so you can understand what I mean by that. So if you understand how to read momentum shift, then you'll be able to read BTB. So watch this. Watch this. I'm going to call up momentum shift now. Right? I'm calling up momentum shift. It's not appearing. So I guess the way it was coded, but momentum shift on 15 minutes is actually BTB. This was the last bearish candle response for that high. Price broke it to the downside. Let's find another example to use. Let's go to, somebody give me a pair here. Somebody drop a name of a pair. Yeah, thanks, Ben. Somebody was asking what's the meaning of ADR, average daily range. Somebody drop a pair and let's look at that. EU. All right. So we have Euro USD. Euro USD. What happened? Wonder. All right, so Euro USD, we are going to take off all the drawings, and now we'll call up our H4PC. H4 prophetic candle. H4 prophetic candle. I was wondering why it wasn't showing. Right. Okay. So this is the H4 prophetic candle, and it gave us reasons to buy. So we would have fibbed from this point to this point for a buy. Let's make it only the entry fibs. Okay, so this is it. Once we had this breakout, once this candle closed above this block, right? Boom. Yes, use a magnet. Once that candle closed above that block, we basically had a bullish bias instantly. So price came to our preferred entry, bought, came to our preferred entry, bought, came to our preferred entry, bought, whoosh, several times. Now, let's see how would we have taken this trade every single time that price came. So we're going to put vertical line here, another one here. That's okay. Maybe another one somewhere around there. Now, note again, if you were trading this off the 4 hours, no force. You just put your entry, 1, 2, 3. Price would have picked them, picked, danced around for over a day, played with your emotions, and then boom, hit TP3. I think this should be TP3. Yep, 1, 2, 3, straight up. So let's go down to 15 minutes now and see how we would have taken this trade. 15 minutes. All right, so let's see. So how would I have taken this trade off the 15 minutes? This is the very first test. So price traded back down. This is the last bullish candle responsible for this low. This is the last bullish candle responsible for this low. Price broke that bullish candle. Let's put a line. Let's put a line there. So this is the last bullish candle. That's the candle we're looking at. Responsible for this low. Price broke it here, right? So when price broke, what we'll do, we'll draw a bullish, and we'll have our stop loss somewhere around there, waiting for price to come. Price came, picked our first one, went, second one, boom, hit stop loss. Sorry for our loss. Right, move to the next one again. We are still bullish. This was the last bullish candle responsible for this low. We'll now move our line to that point. We're trying to catch very small stop loss and massive move, right? That is it. So price came, price was coming down. Notice price was making lower lows, lower lows, lower lows. It's a bullish trend on the H4, but bearish on the 15 minutes. We won't chase this 15 minutes. We are looking at a higher time frame. So price was trending down, trending down, trending down. This was the last bullish candle before this low here. Price came, never broke it. This was where price broke it. You see? Price broke at that point. Once price broke at that point, we will now draw our bullish fib from this low up to this point, right? And see how price came straight to the preferred entry. Let me take out the H4 so that you can see, right? So price came straight to the preferred entry and then short. Now let's see how many TPs this one hit, right? So again, I've mentioned in this class, in this webinar several times, you have to be comfortable with losing. You have to lose gallantly. So price went from that level, TP1, TP2, TP3, and got very close to TP4. Switch trade using beat the bank. So which candle is our beat the bank? which candle is our beat the bank. This bullish candle responsible for this low is our BTB. This is our beat the bank candle. When price breaks above the beat the bank candle, everywhere here is our buy zone. Again, you can dollar cost average on your 15 minutes. No rule says you cannot dollar cost average on your 15 minutes. You could come down your 15 minutes, have entry 1, entry 2, and entry 3. Price came, picked every single one of them, and then gave you more or less 3 or 4 TPs on its way up, right? What's the daily target? This could have given you that daily target, maybe. I don't know what daily target is, but that is beat the bank in short. I believe I've been able to clear what beat the bank is, right? Beat the bank candle. You can spot it anywhere. It is the break in market structure on the 15 minutes or on the lower time frame, but specifically on the 15 minutes. It's the break the bank candle on the 15 break in market structure, I beg your pardon, on the 15 minutes. So we covered something before we started recording. I'll just cover it here for the purpose of everyone, and then we'll move on. We'll wrap it up for today. So let's go back to AUD USD. Or we could even use Euro USD. We could use Euro USD. Euro USD. Let's go to the monthly time frame. Top-down analysis right now. Top-down analysis. Top-down analysis. Right. Okay, so here we are. You can see, if I call up momentum shift, right? So I have that shift, we have that, fine. Okay. So watch this. This is an AQZ qualifying candle. This is the highest point recently. And this happened January 1st, the month of January 2018. This was the highest point I can see on my chart, right? And price dropped below. I could just fib that point, put on my magnet, fib it from the top to the bottom, right? Once I fib that from the top to the bottom, I can basically know in my mind that everywhere within this region, I could be looking for reasons to sell, right? Okay. So once I've done that on the weekly time frame, I know I'm looking for reasons to sell on the monthly time frame. I can now drop down to the weekly time frame. In fact, I can leave out this and do this. I can basically do this. I can do this from this point to this point until price closes above. Everything there is a sell, right? I can find a very sweet color for this thing. I can give it, I can give it something like this, all right? And make it thinner. Oh, yeah. Okay, so I'll take out my AQZ right now. What happened? Sorry, guys, I need to undo some things. Okay, I played with my AQZ colors. I'll get them back. All right, so take this out. Now I have my sell. I know, but if price comes here, I'm looking for reasons to sell, right? Then again, on the same monthly time frame, I can clearly see this bearish candle and price push to the upside. So again, I could draw my AQZ fib. You see that? And now I know that this level here is a level for buying. off the weekly. Everything we're doing here is off the weekly, guys. So I have sells, buys. Oh, sorry, off the monthly. I can now go down to the weekly time frame. I can now go down to the weekly time frame. Something similar. Again, on my weekly time frame, what's my lowest point? This happens to be, this is the candle. It still coincides with where we are, so no problem. It's still the same region. In fact, the P is still the same region, so I'll leave that. I can go to the daily time frame now and see if I can find something again. You just do that same thing. Where is the lowest point on the daily time frame? Lowest point on the daily time frame. I have this as my lowest point, but there is no AQZ qualifying candle there, right? We don't have an inside bar. We don't have an engulfing. We don't have anything there. We just have, you know, a bottom. So for that reason, I might come here and use this inside bar. So here I have this inside bar, right? So if price returns to that region, I'm looking for reasons to buy. And now I can drop back to H4. So having done this, I want to drop down to my H4. I did that on the monthly and the weekly, and that will remain on my chart like forever until price violates those zones. So you see how price came to preferred entries and bought off, right? You see how price respected those zones as they came in for sales and for buys. So you could do your top-down analysis again. We'll cover that next week, either Monday or Tuesday. I'll drop info on that in the group. So in parting, BTB is breaking market structure on 15 minutes. BTB is breaking market structure on 15 minutes. We'll do one more example and we'll call it a wrap. Let's look for another pair, maybe a GBP pair or something. Oh, let's trade Bitcoin. Sweet. Let's look at Bitcoin. H4. All right. So here we have a bullish H4. I love trading those things on 12 hours, but let's use H4, no problem. So here we have H4 bullishness here, right? And this bullish candle here is reacting off of this AQZ qualifying candle. So in that case, I won't consider this PC. I'll rather be considering this one, right? We'll cover that when we do the advance, right? So those of you that have been following us on the Thursday webinar, AQZ webinar with Bishop Raj, you would have seen that here I mentioned that if you have PCs close by, pick the lowest one for a buy and the highest one for a sell. You want to be buying and selling from the fringes. So here we come and we have this, right? You would have drawn this. So this was one buy, two buys. Let's see how we would have gotten in for this buy. I doubt if price gave us a reason to get in, because that rally, once it touched 47, we discussed with some people in our crypto group that 47 was going to be the lowest point we anticipate price to come to. And price just came there, tapped on 47 or thereabout and pushed up. Congratulations to all those who jumped into the trade. But here, let's take this region. How would we have gotten in for a buy from this region now? So drop down to 15 minutes. How would we have gotten in for a buy on 15 minutes from that point? Okay, where are you? Oh, right. So that's it. So see that, make it bigger for everybody to see. This is the last example for the day. This was the last bullish candle responsible for this low. This was the last bullish candle responsible for this low. So we're going to fib to the upside from that low to the high. This was the breakout, right? And we never got a retest for a buy. That buy was very, very bullish. But let's wait and see. We never got a retest for the buy. But let's use this. That's why I said we couldn't have gotten an entry. Once it tapped on that 47, it went. But we would have gotten an entry for a buy off this, right? So this was the last bullish candle. Look at it. This was the last. Yep, here. Last bullish candle response for that low. Last bullish candle response for that low. This was the break. We would have fibbed this from this point to this point. When price came towards preferred entry, we enter. Depending on where your stop loss is, you might have been taken out of this trade by this week. And if you were taken out of the trade, sorry for your loss, you re-strategize and check again. It means that this is the lowest point now. And what candle was responsible for that lowest point? This. Now you'll be waiting for this one to be broken. When that is broken, you have this, right? This is the break. This is the test of preferred entry. That is the push. Whatever you lost, you have made back in that push to the upside. Whatever you lost, you have made back in that push to the upside. So ladies and gentlemen, that is beat the bank candle on 15 minutes. I'll stop recording now, and hopefully you guys caught something. Again, how do you join the group? There's an AQSD group. I'll drop the link beneath this video. I'll also drop the link of SimplyPips beneath this video on YouTube. Join us. All right.